conference call for discussing the financial results for the quarter and year ended March 31st, 2025, along with the recent developments. We have with us today on the call Mr. Virendra Maheskar, Mr. S.S. Rana, Mr. Anil Yadav, Mr. Mehul Patel, Ms. Poonam Nishal, and Mr. Tushar Kavedia. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Please note the duration of the call would be 45 minutes, and any queries left unanswered after the call can be subsequently mailed to the management for adequate response and resolution. Please note that this conference is being recorded. I now hand the conference to Mr. Yadav to give an overview of the significant developments during the quarter. Thank you, and over to you, sir.
Thank you. Good morning, everyone. I welcome all the investors and analysts to our earnings call for Q4 results of financial year 24-25. I trust you have reviewed our detailed number and presentation. I will briefly highlight the key points for the quarter and for the financial year. We have achieved 23% year-on-year toll revenue growth across our projects in private InvIT and IRB for FY25, surpassing the national toll revenue growth of 12.5%. Private InvIT is consistently generating positive cash flow from last financial year. For Q4 of FY25, they have declared a distribution of approximately 54 crore rupees, contributing to IRB's cash flow proportionately to its holding of 51%. For FY25, the cumulative distribution around rupees 243 crores from the private InvIT. Considering the immediate opportunity in the sector, IRB Infrastructure Trust has issued and revised the non-binding offer for a subset of original offer, comprising of 3 matured assets to IRB InvIT Fund from earlier 5 assets. As of March 2025, these assets have an enterprise value of approximately 8,500 crores as per independent valuers report of the private InvIT. The proceeds will be utilized towards the upcoming opportunity. Ganga Expressway project has received grant totaling to 1290 crores from UPEIDA out of the total grant of 1756 crores. The project is progressing according to the scheduled timeline and is expected to complete on time or even ahead of the schedule. We have applied PCOD/COD for Vadodara-Mumbai Expressway Package 7 HAM project and Palsit-Dhanpuni BOT project as they near the completion. Upon completion of the Palsit-Dhanpuni, the tariff for the project is set to be revised from 75 to 100%, and it will also receive escalation for 3 years additionally. India Rating has affirmed the long-term rating for the company, which is AA- with a stable outlook. Our total order book now stands at around 31,000 crores, and next 2 years executable EPC and O&M order book is close to 5,000 crores. Now I will request Tushar to cover the financial highlight for Q4 of FY25. Over to you, Tushar.
Thank you, sir. Now I'll take you through the financial analysis of Q4 FY25 versus Q4 FY24. The total consolidated income for Q4 FY25 has decreased to rupees 2,218 crores from rupees 2,504 crores, down by 11%. The income from InvIT and related segment for Q4 FY25 has decreased to 307 crores from rupees 399 crores, down by 23%. The income from BOT segment for Q4 FY25 have increased to rupees 641 crores from rupees 619 crores, registering a growth of 4%. The income from construction segment for Q4 FY25 have decreased to rupees 1,202 crores from rupees 1,442 crores, down by 17%. The other income for Q4 FY25 have increased to rupees 69 crores from rupees 44 crores, an increase of 55%. EBITDA for Q4 FY25 decreased to rupees 1,066 crores from rupees 1,333 crores, down by 20%. Interest cost decreased to rupees 458 crores in Q4 FY25 from rupees 615 crores, a decrease by 26%. Depreciation cost increased to rupees 286 crores in Q4 FY25 from rupees 274 crores, an increase of 4%. PBT has decreased to rupees 323 crores in Q4 FY25 from rupees 444 crores, a decline of 27%, and PAT has increased to rupees 215 crores in Q4 FY25 from rupees 189 crores in Q4 FY24, an increase of 14%. Now I request moderator to open the session for question and answer.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. I would like to remind all the participants, if you wish to ask any questions, you may press star and one. We have our first question from the line of Vishal Periwal from Antique Stock Broking. Please go ahead.
Yes, sir. Thanks for the opportunity. Sir, in your commentary, you mentioned we have executable order book of 5,000 odd crores. So is that fair to say 1,200 is EPC and remaining O&M is 1,800?
So this includes 2,400 of EPC and around a similar amount for O&M as well.
Okay. And O&M will be equally distributed between these 2 years. EPC will be for FY26, largely. That's fair to understand?
Yeah, that's right.
Okay, got it, sir. And then incrementally on this InvIT revenue that we have booked, quarterly basis, though I mean on an annual basis there is a growth, but for Q4 we are seeing a revenue from InvIT, including dividend, of almost like 300 odd crore, which is down. So how one should see this revenue line item for 26 and 27? If you can just give some color.
Yeah. So if you see for Q4, because that's the normal quarter when we have introduced this segment from Q3. So for FY26 and 27, we can assume the similar run rate considering Q4 as a normal quarter.
Okay, quarterly basis.
Yeah. Vishal, last year also, because of the arbitration awards, there was a one-time income. So that's why corresponding quarter of the last year is not comparable.
Okay. Got it, sir. And then for understanding, so in April month, we have reported a gross toll collection of increase of almost like 10%. So X of toll rate hike, this number could be how much? And then second related is like, for the full year basis, since I think in the media briefing it was mentioned, large part of the growth will be in the second half once the asset get commissioned. So it's fair to understand that toll increase will be like kind of 10-12% for the full year basis.
Vishal, you are absolutely correct. If you look at the traffic growth, we have witnessed very robust traffic growth, around 6.5 to 7.5% kind of traffic growth, and overall revenue of 10% growth. Because we have received a tariff revision from 1st of April around 3.5 to 3.6%. And now coming to the Palsit-Dankuni project is going to become operational, there will be increase in the revenue. And plus second half of this financial year, Ganga project will also become operational. So these two projects will be adding up. We can see that lower double-digit kind of growth on toll collection. This is without factoring any new project in overall portfolio. This is based on the existing portfolio what we have.
Okay, sure, sir. Got it. And maybe one last thing from my side is any color that you can provide on the sector One is how has been the last year number of BOT projects awarded, bidded, any color on that front? And I think your presentation did mention the opportunity remains. So any outlook or past year, if you can give some color, sir, that will be helpful. Yeah. Thanks so much, sir.
Yeah. So Vishal, I think as we all have seen, the year gone by has seen a very muted order inflows across the sector. Primarily earlier part due to election and later part also it has not picked up so much. So I think the catch up should happen this year, particularly the focus looks to be TOT and monetization. So we are also keenly looking at the opportunity. As we have already announced, we are trying to do an asset rotation between private InvIT and public InvIT and trying to get ourselves ready to ride this particular wave of bidding that comes up. So we are equally hopeful that this year it should see a much better color compared to last year.
Okay. Sir, according to you, what is the number of bids that are coming that is low, or competition is there, or anything that the government is looking, any more color can be provided, sir?
So EPC we have seen significant competition and bids going as low as 40% below NHI EPC. But on the TOT, BOT side, not much has happened. Couple of BOTs we have seen go by. So it's a little early to comment on how they will overall shape up. But the response received for even BOTs has been quite promising. So 4 or 5 bidders have shown interest in most BOT projects that have undergone bidding, which I think should install significant comfort and confidence to the government that there are takers for BOT projects and monetization projects. So I think the government will take that signal and try to expedite awards on that particular platform.
Oh, okay, sure. I'll come back in the queue for more, sir. Thank you.
Thank you.
Thank you. We have our next question from the line of Alok Deora from Motilal Oswal. Please go ahead.
Hi, sir. Good evening. Good morning. Just had a couple of questions. One is on, similar to the previous question. I mean, we have been, expecting BOT projects to come by, but again, FY25 has been muted, despite the elections being behind. So when we speak to most other players, they are diversifying into other segments, saying that there's a lot of competition here, and there are hardly any projects which are even expected to come by. So just some thoughts whether we are also targeting some other segments now. That is first question. Second is, how do we see this associate income moving ahead, like for FY26 on a quarterly run rate basis?
So, Alok, I think you're absolutely right. The order inflow has been muted or very soft, and that is a matter of concern across the sector. And as I mentioned, I think the focus, that is the reason we feel the focus will shift towards more private participation projects, be it BOT or asset monetization. But I think it is a wait and watch game at the moment. As regards diversification is concerned, we do keep evaluating opportunities across allied sectors, but not something on our mind at this point in time to immediately pursue, because we believe, because in the last 25-30 years of history, we have seen such kind of cycles play out. And in the cycles gone by as well, we have prudently waited, and we were very well rewarded as a reason of waiting out. So even this time around, we will not be in a hurry to start looking elsewhere, and we will prudently want to wait out, prepare ourselves. We will use this time to prepare ourselves that whenever this cycle picks up, we are well, what I would say, capitalized to take benefit of that cycle. I think that is what we will use this time for rather than looking elsewhere.
Yeah. Alok, just to add on the valuation aspect, if you look at IRB, 80-85% of the value comes from the asset business. And as you might have noticed from last 2 years, our O&M execution is continuously increasing. We have 20 years visibility as far as O&M order book is concerned. And gradually, that is closely earlier from 5-10% kind of O&M execution, that has become 20-25% of the overall execution. And after 2 or 3 years, that will further improve. And as you might have noticed that last 1 decade, the project execution on this road sector was largely funded by the government. And whatever the assets so far have been constructed, those will come for the monetization. So those will further add to our TOT and also will increase our O&M order book. So as of now, we are focusing in the sector. As explained by the sir, there will be an opportunity, and we are keeping ourselves ready so that whenever opportunity starts, we should be eyeing for the better award in the near future. And now coming to your InvIT-related income, I think InvIT-related income should be more or less what we have seen in Q4 in the coming year as well. That is, the quarterly run rate should be similar.
Got it. Just one last question. So based on the order book, what kind of construction revenue we expect for FY26?
So, from a construction order book, we have EPC 2,400, which we expect to complete in FY26, and somewhere between 1,000 to 1,200 would be towards the O&M part.
O&M and certain bit of scope together.
Yes. So I think, Alok, all put together, we should see around 4,000 crores kind of revenue for FY26. This is without factoring any new award. And even as you know that there will be a TOT. There will be a TOT project where the initial capex is there, and that needs to be done over the period of 6 to 8 months' time. So considering that if we bag something, there will be additional, but with the existing thing, I think we should be able to do a turnover of around 4,000 crores on the construction side.
Sure. That's all from my side. Thank you and all the best, sir.
Thank you. Before we move on to the next participant, a reminder to all the participants, if you wish to ask a question, you may press star and 1. Anyone who wishes to ask a question, you may press star and 1 on your touchtone phone. We have our next question from the line of Mohit from ICICI Securities. Please go ahead.
Hi, sir. Good morning, sir. Good morning. Thanks for the opportunity. So one question I have on the EPC, of course, as the Inter F26 last year we did 46 billion. How do you see this in the revenue in F26 and F27 given the current order book? Yeah.
So I think, Mohit, as explained, for FY26, it will be without any new order wins. I think it is expected close to 4,000 crores. For FY26, it will depend upon the incoming order, what we will get. For 27, sorry.
Understood. So my second question is, of course, we were looking to divest some of the move some of the private InvIT asset to public InvIT. Where are we right now on that?
Yeah. So with respect to the private InvIT, now the assets which is offered by the private InvIT, those has a EV of 8,500 crores, 85 billion. And expected equity realization is around 4,800 to 5,000 crores. And in terms of approval, we will be moving for the unit holder for the approval of the asset acquisition and also the capital raise. So we are expecting to conclude this transaction from 2.5 months from now.
Understood. And last question on the bidding pipeline. Are there bids in the public domain where the bid submission is happening for the BOT or TOT in the next 1 or 2 months, or somewhere we have put our EC submitted the bid? Some clarity on this front will be helpful.
There are 2 TOT bids which are up for bidding at this point in time.
Has anything else submitted, sir? Any bids? No.
Pardon me?
Any bids which you have submitted?
No, we will not be able to comment on that.
Oh, no. Okay, understood, sir. And sir, and anything from the states, sir? Do you see any opportunity from the states or other for a ring road or something like that, which happened in the Hyderabad? Any opportunity?
Some BOT projects in the very early stage, from what we understand from consultancy projects that have been awarded, may come up at in few states. The few state governments have initiated DPRs for taking up road projects on BOT. So we are keenly watching those as well.
Understood, sir. Thank you and all the best. Thank you.
Thank you. A reminder to all participants, if you wish to ask a question, you may press star and 1. We have our next question from the line of Vikas Agarwal from Primus Asset Management. Please go ahead.
Hi, can you hear me?
Yeah, Vikas, go ahead.
Yes, hi. Thank you for the opportunity. A few things I just wanted to understand, Anil and Bhaskar sir, is when we look at the order book for EPC, it is obviously lower than your historical run rate. So in that context, how should we think about the holdco cash flows? And I look at dollar bonds, so I'm coming from that angle. If you can share some insights on how to think about the cash flows. That's my first question. The second question is the additional amount which you raised for dollar bond. Is that still sitting as a liquidity buffer on holdco balance sheet? So if you can throw some insights on these two questions, please.
Yeah. So, Vikas, as you are aware that for dollar bond, the cash flow of Mumbai, Pune, and plus the cash flow coming from both the InvIT is also computed in the calculation. So we don't foresee that there will be any challenge in terms of cash flow, availability of the cash flow for servicing the dollar bond. And in terms of money, you are correct that whatever the tap money we have raised, around 200 million, that's still lying as a cash with us and which will be deployed for the future opportunity.
Sure. I mean, I don't foresee any challenges, but I just wanted to understand how are you looking at the numbers, or we can get in touch with later as well and to discuss more in detail. But I just wanted to understand how should we think about the cash flow breakup and the key components there.
I think, Vikas, if you consider the cash flow, I think during the bond also we have discussed the broad cash flow. And if you look at the generation from the private InvIT and public InvIT, and including the Mumbai, Pune, the cash flow will be quite robust to service the bond. And plus, our EPC O&M will be gradually increasing, and there will be a generation from the O&M also. And for FY26, anyway, we are talking about 3,800 to 4,000 crores of EPC revenue. So I think that should take care. Anyway, we can't have visibility for EPC more than 2 years. But as of now, the broad visibility is for 1 year because there was no award in the last year. But as the award activity picks up, there will be EPC revenue. But in considering the worst case scenario, O&M revenue and the surplus coming from Mumbai, Pune and 2 InvIT, those will be more than sufficient to cater the bond payout. And in fact, we have discussed those cash flow during the issuance of the bond as well.
Sure. Okay, Anil, that sounds good. Thank you so much.
Thank you. A reminder to all the participants, if you wish to ask a question, you may press star and 1. Anyone who wishes to ask a question, you may press star and 1 now. We have our next question from the line of Vaibhav Shah from JM Financials. Please go ahead.
Hi, sir. So we have seen quite muted activity on the BOT awarding for FY25, while the pipeline was quite strong at the mid of the year. So how is the pipeline shaping up for 26, and how do you see the improvement in awarding, especially on the BOT side for FY26?
I think we keep looking at the bid calendar that is reflected on the government website. But with regard to sticking to those timelines, I think you should check with the government itself if they have a mind to bid out on those respective dates or there is likely to be any pushback further.
Okay. And secondly, on TOT side, what is you mentioned that two projects are active right now. But how is the overall pipeline shaping up? So we expect more TOT projects in this year?
That is what we hear from the government.
Okay. Okay. And sir, lastly, what would be the EPC other income for FY25 annual year?
I interacted with the TOT bidder in which government representatives specifically made out a case that they have a very clear objective of coming out with significant number of TOTs going forward.
Okay. Okay. And sir, lastly, what will be the EPC other income for the entire year, FY25?
So for EPC, other income was full year, it was 64 crores.
And for Q4?
Sorry. Full year it was 190 crores and 64 crores for this quarter.
Okay. So what led to this sharp increase in Q4?
So we have that the amount kept in FD, the tap issuance which we did, which has not been infused, so it is kept as a fixed deposit, which is generating an income on that deposit.
Okay, so just for clarity purpose, our revenue is 4578 crores for EPC revenue for FY25. So does it include this 194 crore of other income, or it doesn't include?
No, it does not include. It's 4578.
So EBITDA includes. So EBITDA of 1152 crores includes the other income.
Yeah, that's right. 1152 includes.
Yeah. Okay. Thank you, sir. Those are my questions.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you everyone for taking time out for this quarterly results update call, and look forward to catch up with you over the next quarterly earnings call. Thank you and have a great day.
Thank you. On behalf of IRB Infrastructure Developers, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.